back at home in Nigeria, where the securities market is set to deepen further as the SEC approved 5 stocks futures and 2 index futures as a basket of exchange-traded derivatives for the Nigerian Exchange Group. Joining me for our chat to this is Jude Chiemeka, the Divisional Head Trading Business at NGX Group. It's been a long journey, Jude, today's moment. So congratulations to all of you at NGX. But tell me about the significance of this approval from the SEC.
Thank you so much for having us. The significance clearly is that the journey started a very long time ago. As a matter of fact, in 2014, following the feasibility report conducted by the exchange at the time to deepen the market. The exchange remains very committed to market development initiative. And at the time, there were some rudimentary requirements for derivatives markets that were not in place. But following all the heavy liftings that have occurred, especially in the part of the Securities and Exchange Commission in Nigeria, we have seen a whole lot of those things in place at the moment. So this is perhaps leading to the very grand finale of a long journey that started in 2014 as we are set by these approvals of this contract to begin to launch the product in the local environment.
How did we arrive at the 5 stocks futures and the 2 index futures?
Like I explained, the feasibility report clearly at the time takes cognizance of liquidity of these stocks. Derivatives largely are instruments that have underlying assets, and those assets could be equities, bonds, interest rates, or commodities. And to create those assets as underlying assets, then the cash equities market in this case will have to show significant liquidity. So that is the consideration for creating the instruments around this particular product.
Okay, so but what are the possible impacts of derivatives trading on the market? You already have ETFs on your market, by the way. So what layer of addition is this? Are these exchange-traded derivatives or futures?
Thank you. The derivatives on their own would certainly help to deepen the market. It will help to de-risk equity investments. In this case, we're starting with index futures leading up to single stock futures. Derivatives also help to improve better price discovery and also provide access to investors who ordinarily in a cash equities market would have to put up all the cash required. But in this case, they can take those positions without necessarily putting up all the cash requirements. So the derivatives, in this sense, to a large extent, will help really de-risk the market and make the market a lot more efficient than we currently have it. So the volatility that we see today in the local markets will be greatly mitigated by the introduction of derivatives in our markets.
What sort of timelines are we looking at before investors can participate in it? Well, it's going to be a free-for-all when you launch?
The consideration really for derivatives will be on the institutional side mostly. Also, there's provision for retail participation in the market. And the derivatives themselves obviously require a lot more training, market development initiatives, investor education, just to ensure that investors themselves are aware of the sort of risk they are getting into and how to use this instrument to achieve this objective. So there are certain external dependencies, but we're certainly out of the major concerns. So we should be able to launch this product before the end of the year. In terms of the market efficiency, we do have the technology to drive this. We have the S-Stream, which is configured by NASDAQ. We also have the smart system, which will help to regulate and monitor the market. In terms also of investor protection, the rules that have been approved by the SEC around the trading of this product will ensure that the system is not compromised in any way and investors are protected from any form of misuse of the product.
Well, this trading in these derivatives, you said first the index futures, then of course later the equity, the stock futures. Will it necessarily increase volatility in the Nigerian, in the NGX? Broad market speaking.
We think, just like the role that derivatives perform in other markets, obviously we'll start from the safe index futures for the players to also get familiar with it. There's a lot of investor education. There's also a lot of commitment to providing the right infrastructure. The CCP, which is the Central Counterparty,
yeah,
plays a critical role in this the trading of derivatives. So in terms of managing the risk, both in the sense of trading license holders as well as the clearing members, ensuring that there's a proper mark to market on a daily basis, and also ensuring that the process itself of trading are in line with international best practices. So we believe that with the introduction of derivatives, we'll just certainly be having a much deeper market, and people can hedge in a more efficient manner, and it will allow even greater participation in the market. And the herd mentality and the one-sided movement that typically see in the market will definitely be greatly mitigated by the use of derivatives to control market volatility.
Yes, so this is coming through with institutional investors. In terms of the dealing members, will they all be participating, or you're likely going to have a select few of them getting started? What will be the criteria?
There are minimum operating standards required for derivatives trading. Clearly, technology will play a key part. Capital registration in terms of capital adequacy for the players in line with the SEC approvals. And so we have trading license holders today who are able to trade across the various segments of the assets that the exchange has. And so those trading license holders are also able to trade derivatives in line with the registration that they have with the SEC. But they are required to have the minimum operating standards around technology. Client account onboarding largely will be focused in terms of the technological configuration, the fixed OMS protocols that they have. And we have seen quite a lot of the trading license holders who have indicated interest to trade this product. So we believe that clearly, as we begin to trade, we'll see more participation from these trading license holders.
On a final note, what are the plans to educate local investors on how to derive the full benefits of these ETDs?
I'm sorry, I didn't get the question.
Yeah, I was talking about how to educate local investors. What's the plan on how to get the full benefits of the ETDs?
Yes, we've been doing that at the exchange for a while now. The journey started in 2014, and we have been doing it. In the last couple of years, we've done a lot of that, even this year as well. Just engaging the various investor communities, the retail investors, the institutional investors, as well as the market participants along various groups, the trading license members, leveraging our partnerships with international partners, being a member of the World Federation of Exchanges, just ensuring that investors themselves have a proper understanding of what it takes to trade this product and participate in an efficient manner to de-risk their portfolios. And we continue to do all these pockets of trainings, ensuring that we meet the international standards in the local environment. So that engagement, it's an ongoing exercise, and it will continue until we launch the product.
Congratulations once again, and we appreciate your time on the Rice Exchange tonight. Jude Chiemeka, Divisional Head, Trading Business at the Nigerian Exchange Group.
Thank you very much for having us.
It's good to have you on the show.